I love this the sound you make before starting the news release. Okay, thank you very much, Doc, and we will be back to you in about 15 minutes. And just let me find my slides.
They say one of the TV commercials over here. Awesome sauce.
Yes, thank you, Doc. Okay, so once again, hello, dear everyone. In case you haven't joined us in the SolGMT daily webinar, and as it was announced previously in the economic data release, we are going to discuss U.S. durable goods, and I would like to remind you that it's a leading indicator of production. Rising purchase orders signal that manufacturers will increase activity as they work to fill the orders. So as you can see, the forecast for January is minus 1.7%, and the figure for December was minus 4.3%. Yes, and talking about forecasts further on, orders for long-lasting U.S. manufactured goods, excluding transportation items, plunged unexpectedly in December by 1.6% after a 1.2% gain in the previous month, posting the biggest decline since March. Most orders were weak, with the exception for machinery and electrical equipment, appliances, and component pricing. Durable goods orders fell 4.3% in December after a 3.4% climb in November, pulled down by weak demand for transportation equipment, primary metals, computers, and electronic products and capital goods. Durable goods orders are expected to decline 0.7%, while core durable goods are expected to fall 0.1%. Moving on further, it is possible to see the estimates for the January U.S. durable goods by different economists surveyed on the matter from different firms and banks around the world. And according to this data, we have the median estimate of minus 1.7%, whereas average estimate is minus 1.6%, high estimate of 3.8%, low estimate of minus 4.8%, and number of estimates 83. Yes, and basically, yes, and at this point, talking about forecast further on, I would like to quote an America chief economist, Michael Carey, in Credit Agricole, that durable goods orders likely fell 4.8% in January, with a decline in orders for new aircraft at Boeing contributing to most of the decline. Boeing received orders for 38 new planes in January, down sharply from the 390 orders they received in December, indicating that the change in transportation orders should subtract significantly from the top-line orders figure. The 0.8% decline in durable goods manufacturing in the January industrial production also points to slower activity. And finally, to our fundamental aspects, we were asking our community members about the impact on the U.S. dollar, Japanese yen, and as you can see, dear everyone, our traders were rather bullish on the matter, that is 59.23% bullish versus 30.77% bearish. And we have like two bullish comments, that one by Carpe, that moderate volatility expected. Actual value is the lowest value since September 2013. It expected some improvement on this indicator as forecasts suggest. At the same time, will be released initial jobless claims and most important core durable goods orders month on month. All these indicators are good for U.S. dollar, bullish in fact. And one other bullish comment by Samkit that this release will surprise market with better than forecast figure. And I guess that will be it from my side. And now I would like to welcome Alex on the whiteboard, who will discuss the technical part of the matter. So Alex, my word to you.
Hello everyone. So today I'll be presenting the negative surprise trading strategy, and as you all know, today we are discussing a potential impact of the US durable goods on the greenback. And as always, we also having a release of US jobless claims at the same time from the Labor Department. And even though both forecasts are speaking in favor of improvement over the corresponding period, still there is a high possibility that data will surprise markets to the downside, keeping in mind that severe weather conditions have become a major drag on the economy during the last couple of weeks or months. So we should not exclude the possibility that the greenback will depreciate soon after the release of the data. Therefore, our negative surprise trading strategy is based on United States dollar and Turkish lira currency pair. And the main reasons behind choosing this exact pair is, first of all, strongly bearish market sentiment, and we see that practically 60% of traders are holding short positions on the pair. And even though that's not one of the major crosses, still the pair is expected to depreciate according to Dukascopy traders. So, well, we see that currency index suggests that the greenback is bought in 64% of all cases, while Turkish lira is bought as well in almost 58% of the time. And when having a look at pending orders, we see that practically 55% of them are placed to buy that pair. So in a longer term, the pair is still expected to appreciate. Well, I would like to stress out that initial negative surprise trading strategy was with the entrance point at the market price as always, and the potential stop loss was suggested to place at the 4-hour pivot with the take profit around 2270. Sorry. However, we see that during the last couple of minutes the pair has performed quite an aggressive rally to the downside. Therefore, we were forced to revise our trading strategy. And now the potential take profit stands at 2.2109, and to be more precise, that's 4-hour support, which is actually 140 pips from the market price. So keeping in mind that data can have a strong impact on the greenback, then the target looks rather reachable. So when speaking about stop loss, we suggest placing it at 2.2290, and that's quite a strong support level for resistance level represented by weekly pivot. And we see that recently the pair has been experiencing difficulties around this level, so in a shorter term it's expected to hold pairs appreciation. So once again, the potential entrance point is the market price, which is currently hovering around 4-hour support at 2.2263. The stop loss is placed at 2.2290 at the weekly pivot, while the potential take profit can be placed at the 4-hour support at 2.2109. And as always, here is a table with the technical indicators, and we see that vast majority of them is suggesting that the pair will move sideways in the nearest future. However, indicators on the daily chart are sending sell signals, meaning that when being based on technical indicators, the pair is expected to depreciate. And one more thing I would like to show you, that the 4-hour chart, and you see that on February 24, the pair has penetrated pattern's resistance and already has performed a almost 600 pips rally, so quite an impressive move. And keeping that in mind, the outlook for the pair is still bullish. However, we see that currently the pair is moving below 200 period simple moving average, and when having a look at pair's performance during the last couple of weeks, we see that simple moving average was quite a strong support level, and that was holding pairs appreciation or depreciation. So we might suggest that the pair will struggle to go any higher. So I guess that will be practically all from my side. And once again, the possible take profit can be placed around 4-hour support at 221.09, while the potential take stop loss can be placed at weekly pivot at the level of 2.2290. And I guess once again, that will be all from my side, and I'm giving the floor to Thomas, who will discuss the potential positive surprise trading strategy. As well, he will have a look at the market reaction. So welcome, Thomas.
Alexander, yes, I'll be presenting a possible positive trading strategy. So in case the data comes out better than expected, we expect we should see the other currency counterparts of the United States dollar using ground. And I'll be doing my presentation on the Euro United States dollar. And one of the main reasons out of a few actually is that current market sentiment is moderately bearish. 65% of traders expect depreciation of the pair. So euro losing ground against the dollar. 64% of pending orders in 50 pips range and 68% of pending orders in 100 pip range around the current market price are actually set to go short. So in case we'll see some sort of volatility, there will be additional pressure for the pair to trail lower. And also euro overall is sold in almost 60% of the cases, and United States dollar is bought in 66% of the cases across the board. Now the strategy itself is to sell at current market price these peaks, and let's say when currently the pair is trading above the 200 bar, effectively 200 minute simple moving average, are very favorable to do so. Stop loss at this recent peak you're seeing right over here at 1.36644, which is 5 pips above the current market price, and take profit at the 55-day simple moving average, which is at 1.36465, which at the moment would be almost 14 pips below the current market price. That being said, I guess, yeah, also in addition to that, in favor for this trading strategy speaks the fact that clients of other market participants like Lando or Saxo Bank are around from 68 to 70% bearish, and also expect the depreciation of the euro against the United States dollar. We are getting also rather mixed signals from the technical indicators on the relevant horizons. However, stochastic and RSI and other technical indicators which indicate usually the turning points for the period do not give any clear indications. So I guess we shouldn't see, so there's no additional technical pressure, and the most of the reaction should come out only from the pricing in the information. So yeah, around minute left till the release of the data. So once again, possible positive surprise trading strategy, sell at current market price, take profit at the recent peak at 1.36644, which is located right over here, and take stop loss. A stop loss at 1.36644 and take profit at 1.36465 at the 55-day simple moving average. So yeah, I guess we are seeing some movements, and I guess the data come out positive, better than expected. We're seeing initial market reaction of 9 pips. Right, core durable goods 1.1, expected minus 0.3, and previous minus 1. So we saw substantially better results than expected. The market reaction is around 10 pips. And we can see that some of the, of course, the reaction is subdued by the fact that we saw slightly worse than expected unemployment claim. So I guess this reaction of 10 pips is pretty much everything we will be seeing. Some bullishness up till 200 bar simple moving average should be expected as some of the traders leaving the positions and winding up their gains. And I guess in the medium to long term perspective, the pair should continue trailing and consolidating around 1.365, maybe slightly above it, maybe around 1.366. So that being said, that will be all from my side, and I give floor back to you, Paulina, to wrap it up.
Yes, thank you very much, Thomas and Alex, for presenting the news release. And I guess it's all from our side. I hopefully it was interesting for you guys out there. And yeah, data come out better than expected. It's always nice to see that. And yes, I guess it was all from our side. Thank you very much. And Doug Dow, moving on to your webinar, back to your webinar, that is.